Thanks for staying with us. Now, prices of some goods and services have witnessed some marginal increase on the market. This was after some businesses started applying the 2.5% VAT increase to their customers. Here's more in the following report.
This follows the 2.5% increase in the VAT rate, bringing the actual rate for the tax to 15%. Some have argued that if you add the National Health Insurance Levy and the Get Fund Levy, the total rate payment for consumers may be way higher than what that has been communicated. Some firms like DSTV Ghana and the Text has told consumers that from January 1, 2023, after the assent of the recent VAT amendment bill, the DSTV premium package price has been increased to 440 Ghana cedis. In the coming days, some other service providers would also be announcing an increase in prices of their goods and services in line with the revision to the VAT amendment bill or the VAT law.
Let's get on Zoom now and speak to former Finance Minister Sir Tekbe for more clarity on this. Hello, sir. Thank you so much for your time on Business Live. First off, let us understand that can the Ghana Revenue Authority go ahead to implement the 2.5 VAT increase as well as other fees and charges with the required regulations?
Yeah, thank you very much for the question. Yes, the Ghana Revenue Authority can go ahead if the legislation that was passed by Parliament takes immediate effect, which is why sometimes, because we are dealing with tax issues, Parliament stays overnight, or deep into the night to pass the legislation in order that there wouldn't be tax evasion and avoidance moves. Where the law requires that the tax should come into effect at a certain date and specifies the date, then again, on that date, the GRA can go ahead and collect the taxes. There are instances, a few, where the minister may be given, the discretion to determine the dates. And most legislators don't like discretions, most legislatures. But in that instance, the minister may then issue, if the law says he can do that by regulations, then he would have to issue the regulations, go back to Parliament, for the legislation to be passed. When we say that the minister issues regulations, the regulation is actually a subsidiary legislation, which has to go back to Parliament, unlike other countries. So yes, once the law is passed, in the case of taxes, then it becomes effective. From immediately the president assents, to the tax, unless the law itself gives a different effective date. In general, where the law says the minister should, issue regulations, the regulations normally have to do with clarifications of certain matters or further expatiation of, specific sections. Rarely does it actually talk about an effective date for implementing the tax. But if businesses have to prepare for the tax, for example, a good example is the e-levy, because it is new or it was new then, and businesses would have to adjust their computer systems, or those who have, or even the GRA itself may have to, for those who may, the returns which have to be filed and others, then in that case, the law may require, the minister to issue regulations with respect to some of those things, or empower the minister to implement the tax at a future date. And usually, even legislatures like the date to be specific. They do not like uncertainties and giving discretions to ministers of finance.
But what do you make of arguments that there are still some elements of double taxation with this VAT, and maybe more education from the regulators on what would have helped?
Well, the issue of double taxation is what you also call a tax on tax. You will recall that when the VAT was legislated many years back. It was legislated at 15%, and then it was cancelled, and on reintroduction, it was the rate was fixed at 10%, a much lower rate. Around about 2000, the VAT was increased to 12.5% from 10%, but the amount was dedicated to the Get Fund. Then again later, there was another legislation. No, I believe that was in earlier. Then there was another increase of 2.5%, and the amount was dedicated to the National Health Insurance Levy. In both cases, the VAT was charged for a long time as though it were VAT, and I will explain shortly why it was charged as though it were a VAT. Two reasons. Then the Ghana Infrastructure Investment Fund came much later, and that was a 2.5% increase. That also to date is actually collected as though it were VAT. Now, when you say it's collected as a VAT, the unique thing about the VAT is that because VAT is a consumption tax, like excise duty, tariff or customs duty, it is the consumer who pays. It is not the business. But before the product becomes final, business inputs can be sold by one business to the other. If the tax is imposed on those inputs and nothing is done, for example, businesses are allowed to defer the payment of the tax until it reaches the consumer. Or in the case of the VAT, you will collect the output VAT, that is the VAT on your sales, that because you used inputs to get the sales, that is inputs, that is purchases plus profit to get that, to get that output VAT, you would have paid VAT on the inputs. Now, if you are not allowed to offset the VAT you paid as a business or the inputs against the VAT that you are charging, because the tax on the inputs have been collected and paid to GRA already by whoever sold to you. Then, if you are not allowed to do that, then the business has a right to treat the tax on the inputs as cost. In that case, so let's illustrate. If I bought inputs of 100, and let's simplify it, and I pay 10%, it means that I'll pay 10 Ghana cedis to whoever I'm buying the items at 100. If I add profits and my other inputs at, and I end up, with additional cost of 20, the value of the item is 120 without the tax. But remember that 120 includes 100 on which 10 was paid already. Now, if I charge VAT to the consumer, let's assume we don't have to prolong it, that now I sell to the final consumer, I will charge 10%. That is 10% of 120, and that is 12. But that 120 includes 100 on which 10 was paid already. So I'll be allowed to deduct that 10 from the 12, and I'll pay only 2. So in that case, the total tax is 10 that was collected by the one who sold to me, and 2 being the value that I have added 20. That's the name, that gives the name of the tax. So the tax ends up on the value which each seller, has added in the process until it gets to the consumer. If this is not done, then the 10 will be added to the 100 to make it 110. And the 20 will be added to make it 130. And in that case, the VAT to be charged will be 13, not 12. The 1 is the tax on tax, because the 1 represents 10%. That's the 12, 13 minus 1, which is 1, is 10% of the tax of 10 that was charged already. That's what we mean by tax on tax. So when the government removed the Get Fund and the NHIF from the VAT base, they stopped businesses from claiming that input tax. So to that extent, any NHIL that was paid on inputs will keep adding to the cost. I hope you get me. Will keep adding to the cost because they are no longer part of the VAT. They call them straight levies. In the past, they were part of the VAT, which was a 17.5%. So the cost will keep multiplying itself until it reaches the consumer for as long as inputs are passing between business and one business to the other. This is why there are two arguments that by removing the Get Fund and NHIL and calling them straight levies, like other levies, COVID levy and the rest, they are adding to costs, and you are imposing VAT on them each time the commodity or supply changes hands. And that does not make the tax efficient. Okay, on the other hand, the argument that the VAT is an increase from 12.5%, that's a recent increase of 2.5%, was an increase from 12.5% to 15%, is also dismissed by other people who say that the VAT was already 17.5. And so by just separating it between VAT and straight levy, does not necessarily make it that we are no longer paying the VAT. And therefore, the substantive rate of VAT, which has been in existence since 2018, is 17.5, and you are only adding 2.5%. And therefore, the actual rate is 20%. And just tell Ghanaians that the VAT rate is 20%. The fact that you have taken it and called it a levy is neither here nor there. In fact, that in itself is rather adding to the cost of production and adding to prices, which some argue underlies the rate of inflation that we are seeing today. It's part of the reason for the rate of inflation.
Okay, so being a former finance minister, do you think that this is the way to go?
Well, let me talk as a tax expert, somebody who has been, when I say expert, has been giving advice, to countries, including Ghana. No, it's not the way to go. Because if you do that, if this is what we want to end up with, a tax on tax, then there was no need for us to reintroduce the tax after Kumipreku. The only reason VAT replaced the old sales and service taxes were twofold: to have a uniform, consumption tax system. Remember I said the tax system is on consumers. And then secondly, to alleviate the VAT which businesses pay on inputs so that they don't pass it on to consumers. And this is what has prevailed until now. So yes, we may need, revenue. Yes, we are in a tight situation, but in the end, you are making the tax inefficient. You are raising taxes inadvertently, so as long as they are moving in, and you end up making the work of GRA very tough, because businesses would begin to practice what we now call, everybody knows, to be tax evasion and avoidance. And in fact, time permitting, I can show that since this move was made, the tax hasn't brought in as much revenue. If you are thinking that you remove it so that instead of allowing the business to take a credit, it's not ending at that way, because it's encouraging evasion and avoidance. And this is the same as the so-called withholding, VAT on those who have not registered for VAT, when their goods come to the port. Again, it's a duplication, because the customs laws do not say that you must be registered before you pay VAT. In fact, if you were to import a vehicle as an individual, customs will collect the VAT. It doesn't matter whether you are an individual and you are registered or you are not registered. If, however, a business imports a vehicle, and there are limitations in the way, but let's assume they import a vehicle or they import inputs, because they are registered, they'll pay the VAT, but they will have the right to deduct, again, the input tax that we are talking about. So that invoice, that customs entry, is enough for customs, for GRA to enforce compliance. So by going to withhold again for somebody who is not registered as a business and all that, it is not like an income tax where you can claim a credit for any withholding tax that you pay. And I'm not registered so that I can take a credit. So what is the mechanism we are putting in place? We are confusing the income tax, with the VAT. In essence, what I'm saying that in our rush, we are industries, we all know that, and that's why we used to have the temporary taxes. We should not also create situations that would make it difficult for businesses going forward.
We leave it here, sir. Thank you so much for your time. That was former Finance Minister Sir Tekpe giving us some clarity on the implementation of the 2.5% VAT increase.